Well, one of the highlights every year here at CattleCon is the annual CattleFax Market and Weather Outlook. And joining us now from CattleFax is one of their leading analysts, Kevin Good. And gosh, it was standing room only, Kevin, as always, here in San Antonio. And by all accounts, we still have record tight cattle supplies out there, and that bodes well for the cattle market moving forward, at least for a few more years.
It does. If we think about where we're at from a cattle cycle standpoint, we've experienced 6 years of beef cow liquidation. We do think we're at the bottom end of that cycle as far as beef cow numbers are concerned. A couple things we look at there to back that up is that cow slaughter is about 1.5 million off its peak. It still will decline probably another 500,000 over the next 2 years. Heifer retention, we're not seeing a lot of that yet though. So it does look like this cycle is going to be slower to turn around, flat to a little bit declining supplies as we think about fed slaughter over the next 3 years, start to build the cow herd back. It's going to take a few years before we get back in bigger supplies. So supply side continues to be very friendly.
You know, on the beef side of things, Kevin, one of the slides you guys presented here today in San Antonio was how over the years we've moved from a supply-driven beef demand situation to a actual demand driven on the beef side.
Absolutely true. Go back to the supply side to back that up. If you look at our supply, even though we harvested 1 million less cattle last year, predominantly on the cow side, weights offset that. So production in 24 was the same as 23. We imported more product. So on a per capita basis, we actually had more product on the market last year than the year prior, despite that record high values. That bodes well, tells us that beef demand is as stout as anything we've seen in nearly 40 years.
So what's that mean for those cattlemen and cattlewomen out there, as we look at those charts and we look at the data you folks at CattleFax present us every year? I mean, that is honestly delivering some real premiums back home.
It really is, if we think about it. Just the improvement in demand, if we think about it since the turn of the century, has really added about $800 a head to fed values. So that's huge. A big part of that's because prices have been able to go up much faster than the rate of inflation if we look at retail values. So there's more real dollars coming back to the cattle producer. As we've improved grade through that time frame and consistency, that's driven more premiums, particularly on grid arrangements. This past year, the average premium would have been about $65 to $70 per head on those type of arrangements.
Last question for you, then we'll let you out of the hot seat. But I mean, obviously, we're still in a very volatile cattle market right now. And CattleFax is just encouraging cattle producers to maybe use some risk management tools that are available.
Yeah, a couple points we made this morning, particularly as to think about the futures and the volatility we're seeing there. In the last 15 months, we've had 3 breaks, all driven by managed money that have today they're record long. So at some point, they'll start to sell their way out of that position. That occurred late in 23, occurred last spring, occurred last summer. All those breaks, the first was a $30, and the other 2 were $15 to $16 breaks. So let's be prepared. We've already had a pretty stout break. Today is part of that. We're about $4 or $5 lower today as well. Obviously, the higher you go, the more fund money you have involved, the more risk there is involved in the markets.
Well, as always, we appreciate your time and also your expert advice. Again, we've been visiting with CattleFax's Kevin Good. For more information, you can always visit him online at CattleFax.com.